Welcome back to the Eric Krown Crypto channel and a very special day today as I'm joined by a longtime friend of this channel, Mr. Fibbo Swanee, who was absolutely epic in calling for 30,000 plus way back in, I think it was November, maybe December it was, when Bitcoin was well below $20,000. And Swanee comes in here and he just blows the roof off everyone's analysis and essentially was calling for 30,000 bucks before it was on anyone's radar. So I wanted to follow up with Swanee. As always, it's great to have a veteran trader, someone who really does this for a living, who, is not just like fucking around on YouTube, but more importantly, actually knows what the hell they're doing, has the experience. And for that reason, I wanted to bring Swanee back on. And you know what? I'm just going to hand it off to you from there, and we can just go through your charts and see where this video takes us.
All right. Thanks, Krown, for having me on, man. This is awesome. First thing I see off the bat, I need a new camera because I look very pale compared to your awesomeness and tanness and everything. So I guess with the money that I made from the move, buy a camera, right? All right. All right. Let me. Basically, what I wanted to kind of go over was all the different time frames I'm kind of looking at for Bitcoin. I'm going to start out with the hourly, and I'm going to go all the way up to the annual because I want to kind of cover a bunch of different stuff to kind of give a short-term look and then kind of what the macro look is going forward. Because a lot of people are asking, okay, you hit your April, so what's going to go on after April? That's a good question. So that's what we're here to kind of figure out.
Yeah.
All right. Starting off with the
actually
hourly.
Just before you get going, I do want to let everyone know, because Swanee might be a little bit too generous to himself not to mention this, but Swanee wasn't just talking about $30,000 when Bitcoin was well below 20,000 bucks. He was also talking about this time as well, around April to May area. So I'm very interested to see where this model goes from there. I'll hand it off to you yet again.
The timing on it was I think it was like the beginning of December when we last talked, and we were at like 16,000, 17,000, and I had by the end of April we would see somewhere between 30 and 35K, and it kind of hit kind of nicely in April. So the timing's working. So as long as patterns and timing are working, you don't want to mess with them until they don't work anymore, correct? And then get us all kind of stopped out. But right now, all the patterns are still working really well, and I'm going to stick with them and see what we're doing here. But starting off on the hourly, all my charts are going to show my bull and bear zones. For people that don't know, that's one of my main deals is the my threshold theory that I kind of try to measure the psychology changes in the market when it goes from bull to bear, or vice versa. So you'll see a lot of that on the bottom. But one thing that we're looking at on the hourly or in the near term, it busted back into the bull zone right in here, and then this area right here at 28,158 needed to see 3 settles above it to get a buy signal. So my buy signal came in right in here. It actually rallied up and hit the 30K target that we had, and then it worked its way down, and then we had something going on in the market where it popped it all the way down to here. But when you look at the bull and bear zones, it did not go back into the bearish zone. So it was just a nice quick correction. I have no idea what happened, or I really don't care. I mean, it could be a fat finger or some idiot doing something, or it doesn't really matter. So to me, because what I want to do is I want to look toward the indicators, and if you were quick on the draw, you would have bought, you would have sold. Unfortunately, you would have been buying again on the shallow fib because that's when you buy on the break. So you would have been buying right in here. If you were quick on the draw, you could have bought back in here, but you'd have to be pretty on it to get, because you would want to buy it at the threshold point as long as it stayed in the bull zone. Now, if it would have went into the bear zone, you would have been stopped out, and then things would have changed. But you're back into the market. Has not made a new high yet. So if it comes down here and tests the shallow fib again, you do not want to buy again. It's only when you break into a new high and then it comes back down to the shallow fib, you'd want to buy it. But right now, you would be long or long at the shallow fib at the moment, which would be 29, basically about 29.1. And right now it's still kind of holding. We're in the bull zone. Momentum's not super great, but it's not great for either side. So it leans toward whatever the trend is. And right now the trend is still to the upside. So I think some buying interest into that shallow fib would work. So I'm using the hourly. I don't really trade the hourly. I'm more of a 4-hour and daily trader, but I do use the hourly as a as a guide into what possibly could be happening on the 4-hour and so on. So that's what I'm looking at on the hourly, just to see what's going on in here in the near term. So when you flip over to the 4-hour, this one's been quite interesting. This one's been a little bit more difficult to explain when it comes to my fib theory. But when it went back into the bull zone way back in here, we had this nice run up in the market. Had some nice trades, had some pretty good trades. Then we went into this sideways action of boringness for a while. But the interesting thing is it kept holding a nice support level right in here. We rallied back up, and then as I moved this fib here, this one from this threshold, the 38.2% level is at 27,230. And that level is very significant because even though it went into the bear zone here and it went into the bear zone here, it never broke below this level here. That's pretty key. So we went back into the bull zone, went up, and then went back into the bear zone, but it's still above this previous shallow fib. So the what I would look for is 3 consecutive settles underneath. And as you can see, that level is very key on based on my threshold and when the psychology changed. And so far, there's been a lot of buying interest at that level. Even though it went into the bear zone, even the target on the downside with some fib extensions back in here put us between 26.8 and 27.3. Which was right inside this zone. So inside this zone, along with this previous shallow fib, was buy signals for me. As we dip down into the bear zone, this was an area to add longs. So you would have already been long a few times in here, based on some trades that we had. I'm 30% long at the moment. When I say 30%, that doesn't mean 30% of my entire portfolio. It's a whole risk management system, but basically just say that I'm long here. And then we worked up, and then we broke back into the bull zone, and bought again. Have not bought yet, because oh yeah, I did. Yeah, take that back. Once this broke into the bull zone again, and it got 3 settles above this 28.1, which the third candle would have been up in here. You would have been buying again to add to this position, kind of pressing your position, and working our way to the upside. So now we're in the bull zone. Bulls are in control of the trend. We're at the shallow fib at the moment, not buying because it didn't make a new high right here. So if it goes up and makes a new high and then comes back down and hits, I'll buy more. But my next targets are these extensions, 30.8 to 31.3. There's an area right in there at 31.050, is where my target is to take profit on some of that 30%. And then the next target would be the 200 extension off of the fib extensions that I use, which is at 33.1. And then if it starts to get a little bit more crazy, then we're going to get up to that 37.510, which comes from some previous fib extensions. Now, because if we hit this target, it makes new highs. So you have to go back in history to see where those previous highs are to see where we're at. So one thing I like is the hourly still kind of holding bull, the 4-hour still kind of holding bull. But then when you go to the daily, this one's been great. We broke into the bull zone here. We actually came back down to the shallow fib, and that was a buy signal right here for me. And it just touched, the bottom of the bull zone, but stayed in the bull zone, did not go bear, which is awesome, because when the shallow fib off of when I set my fibs here, if we get the buying in here along with the bull zone holding, that is a great signal that that the trend should continue. And so far that's happening. And then of course I got the first target to hit right here at the 200% off the extensions that I use. So that hit, took profit, and then we rebought right here and looking for a move back to the upside as long as we stay in the bull zone. Now, can we come back down? Yes, we can. You always got to have that risk. But the interesting thing is based on everything I've been doing, I'm long back here. So if we come back down and it starts to break back down, I'll still likely be in profit. I'll take the profit, but I also want to stay exposed in case this thing continues to the upside. Um, so that's where I'm at on that. And then of course I got targets at 35.7, and then beyond that it would be 46.4, which I think that's the leg that we could see kind of working up toward that 50K before this thing breaks down into the bear zone. So that's kind of the the path that I'm on at the moment. Now, of course, I look to the indicators. If it starts to break down, the hourly will tell me, the 4 hour will start to say something, and then the daily will start to break down. So, like with any good system, let profits run, take short losses, right? So if this starts to break down, I'll get out, take the little bit of profit, and then flip it the other way and play the short side if the daily starts going that direction. But right now, I don't see that happening. I really like the support that we're getting at this level, which kind of comes into this whole entire level right here on the 4 hour, which is really nice. So as long as that level holds, which is right around 27K, it looks pretty good to continue to the upside. So that's what I'm looking at on those 3 time frames. Anything you want to add there, Krown, before I move on to some more macro look?
Yeah, I figure it's probably a good thing to ask. So to put it into maybe more simplistic terms, this current model would be invalidated, let's say, below about $27,000. Is that about right?
Um, I'd have to look it up, but if once this RSI breaks this level to the
Hmm.
downside and creates a bear zone, um, whatever that price would be, I would probably think it would be around more along the lines of this of the 61.8% level. I'd have to
Hmm.
look to see what that price is. I don't have that up with me, but I would think if it gets back below this 25.3, um, that's probably when it would signal bear. But it just depends on how quickly and how what the market action does. But I don't have that exact number up. I don't have that with me at the second.
Okay. Okay.
But I would say the way I follow it is if it breaks into the bear zone, that's my signal of the psychology change
Okay.
based on what I have. But right now, I would say um, three settles. It's hard to tell, but like three settles underneath this 27.5, because like when you go to this 4 hour here,
Hmm.
this level right in here is really the key level to me. So if you get three consecutive settles on the daily, I would say underneath this 26.8. Um, so when you look at this, it's going to be somewhere in between here, in between this 38.2 and the 61.8. Um, that if it got three consecutive settles underneath this shallow fib at the moment, which so far it hasn't, it's kind of tested it. That would be that first signal. So you'd probably go into the bear zone when it's being tested somewhere in this range. So
Gotcha.
that's what I would be kind of looking for,
Okay.
because a lot of times like what happened on I don't have the chart up, but what happened on ETH the other day, or when Bitcoin dropped and ETH dropped and everything had that big candle and moved to the downside, ETH actually went into the bull zone, but I needed three consecutive settles above it to signal a buy. But it had two, and then that third candle dropped to the downside. So that's why I mean everyone uses filtering in different ways of what really breaks support and resistance. And for
Right.
me, the support or resistance break for me is three consecutive period changes or whatever time frame you're looking at.
Hmm.
So in this case, I would be looking for three consecutive daily settlements under 27.5. And if that happened, that would be a signal for me to, it would be a red flag to see if the bear zone's even intact still, or the bull zone's still intact before it would go into the bear zone. So those are the things that I look for on some of this. But if you want to put a number on it, I would probably say if it starts to close underneath 25.3, we're in trouble. Not in trouble,
Right.
but much larger correction back down
What's
to
happening?
where
Yeah.
where I can kind of show you on some of these macro looks of where that level would be
Right.
if it does break down. Um,
And
yeah,
And then one last thing before we move on. So I'm looking near the top side of your chart, and I believe it says next target or reach target. Is that around 31, 31.5?
this one right here.
Yes, sir.
Yeah, that is 35.5 on the.
35.5.
Yeah,
Okay.
that would be the
Okay.
next target for me on my. That's my next profit taking level based on the longs that I have. So, because
Very interesting.
the first target at 31K already hit, um,
Yeah.
or pretty close to it. I think I had it at 3,900 or something like that.
Right.
And that target hit, and then now that that hit, it came back and hit this part. So I'm back long again at 27.5 with a target of 35.5 off that next leg to the upside, as long as the trend continues. And right now, everything on the pattern is still showing that to happen. So
It's very
35.5
interesting.
would be, yeah, 35.5 would be that next level up. And
That's
hopefully, if everything works well, what would happen is this, you would move your fibs up to the target that would hit next,
yeah.
and then the move back down to the shallow fib would be at about 30.1. So so basically all this resistance that we're seeing now would flip to support when that hit, and then when it comes back down, then I would be buying again, and then my next target would be an even stronger push to the upside, and then that next target would be about 45.8 beyond that.
Gotcha.
So basically just stair stepping it as long as those fib levels hold, and you retrace back to where those support levels should be, and the buying interest is there at those fib levels, and it just stair steps up, I'll just be happy to take profit on every stair all the way up. And so far it's working, and I like what I'm seeing. I just threw these trend lines in here just to show some guidance, but those don't
Right.
really mean much. It's just more of like kind of watch. If it starts to break that trend line, then that would be a first red flag. But
Mhm.
I'm not really trading off it, just more guidelines.
Right.
But that's where we're at on that. Because right now we're just sitting at this previous high here, shallow fibs at 27.5, where I've bought. So, um, but the main thing to me is I start my fibs in a pretty weird spot, based on the threshold theory that I have. So when you start your fib here and you work your way up, and the highs here, this level right in here, which could be in a lot of other strategies and analysis and all that, but the cool thing to me is the shallow fib, or the 38.2% retracement off of this leg starting here to here, um, matched really well on the actual zone that's been created. So the things that I like to see when it's based on my model, because the zones that I have created is based off my analysis, is when that shallow fib hits and holds, and the bull zone also holds. That's just gravy to me. It's like, yes, it's like this is
Right.
working the way it should, or at
Right.
least the psychology of where buyers should be gathering is happening. Now, of course, you probably have. There's going to be other systems that are saying, maybe this order block in here has a support level, or horizontal. There's other ways of looking at it, but I like to look at the way that the proportions are coming out based on the fib levels that they're holding based on where those zones are holding, and to me that's the whole reason I do what I do, and I like what I do. Not that it can't break down and we'll be down
Mhm.
tomorrow, but right now everything's working the way it should, and that's what I like to see, and it gives me more comfort. So when I look at longer term macro looks, as long as these patterns are holding, because these are the same patterns that have been holding over the last couple of years, that I haven't really had to change the zones too much on a lot of these to where it's working. Now, of course, you got to maintain it, adjust it based on certain things, but these levels have worked really well um, for a while. So I don't want to change them because they're still working. So
Right.
you got to kind of go with what's working. Um, let's flip over to the weekly. I'll start with this one, but the next weekly is where I really want to cover some looks. But this one's actually my threshold theory weekly, to where we had a little bit of a bull div back in here. We were in the bear zone, and then we finally broke into the bull zone right here. So this horizontal line shows you when that happened. But the interesting thing is when you look based on my model, once you break into the zone here, you want three consecutive settles above the previous shallow fib. So in this case, the previous shallow fib was 27.7 based off of this threshold going to the downside. So this bear zone here. So when we broke back here, it wasn't a buy signal until we had 3 settles above this 27.7, which came in right about here. So the buy for me on the weekly, or at least when everyone was wondering when it changes to a primary bull trend versus, are we in a bull trap and all that kind of stuff. Now, of course, there was a lot of trades happening from here on up based on the earlier time frames, because you don't want to miss out on those. You don't want to sit there and which I've seen a lot of people do, and they're still calling a bull trap, which is beyond my thinking. I just don't understand. It's a trap. But when it comes to that primary trend going to the other way, that basically signaled right here for me, which is basically pretty recently over the last 3 weeks, to where I wanted to look at the more macro look going forward, now that we've kind of broken that and kind of gave us that more bullish look longer term, which we've been kind of waiting for. So that's what I'm kind of looking at that point. That's really all I wanted to show on this one.
Okay.
The only other thing on here would be when you look back at some of these trend line breaks, and I measure some of these of where the targets are. Basically, I'm taking the furthest point underneath the trend line or above the trend line, and you take that, like this one here, you take that same rate of change, and at the point of break, you take that same rate of change to give you what the target would be. So you have this one. Maybe we can move it over here so you can see it. But this one, the highest point here to the trend line, when at that point it broke and hit that area right here as a target, and then this one hit this target. This one broke down right here at this point, and hit the target down here. The only other thing at the moment, and it's kind of early, but the trend line going this direction is this one. And I got a couple different ones, but the furthest point from the trend line on this one would come in right around this area, and just kind of roughing it in here, and just kind of clone it so you get the same rate of change. And then you put the point of break about right there, and it comes in right around that 50K or so. And then also when this arrow here was the break of this level off my threshold. So when you take the furthest point underneath here, just this move right here, and you take that same rate of change, it matches up also right around that 50K. So to me, based on my threshold and based on the trend line break, the target for this is up around that 50K level. So when you look at the daily here, this 45.8 target, to me seems like a reasonable area to find, as long as the trend keeps going on the daily as your next upside profit taking level. Not that I'm looking for highs and lows, but I'm looking for confluence of areas that would be good for profit taking. And right now that's where that 50K kind of comes in as this, that I think this leg that we're in could get up to that level before we start to break back toward the downside, and maybe correct a little bit. But that's when you flip over to this weekly. Basically, this is actually an 8-day. I like to look at the 8-day for more macro look, because it's a fib number, and it actually gives some pretty good patterns. But this is the one I want to kind of focus on where I think prices could head over the next year or two. When basically there's a lot on here, but let me start with first of all, this green here is just the highs to highs. So when you look at the high, go into the high, and then you get out here for a target for a high, and then the red cycles down here is low to low. So you got the low right here, and then you go to the low here, and then you go to the low right here, and then you got a low out here in 2026. A couple of other things on here. I just drew on this curve here just to hit the highs. There's a red curve line here, and then I just took the straight line off the highs here, and it gives us this range between 124 and 300K. Now
that's a headline.
Yeah, but we're talking
right, of course,
November of 2025.
And I do think and just before you go on, I do think that this is a great place to just remind the community, anyone who's watching, when we talk about these more sort of things that are further and further out there, you know, these are things that are contingent upon multiple different things. So
Yeah, yeah,
understand that,
many
you know,
things.
we're going to check back with Swanee obviously over time. I mean, as long as you're cool with coming back on, but more importantly, you know, I wouldn't want anyone to be like, hey, he said it's going to do this exactly at this time. It's like, no. Like, understand the system here, understand the thought process, understand the logic.
Yeah, yeah. Well, the things that I was trying to figure out where or why we could get up to that level based on
Mhm.
technicals is one of the things I saw on this trend line to the downside. There was a break and then there was a retest. On this trend line here, it was just a break and it took off. And then this one, we had a break and a little bit of a retest off of this latest trend line. And it's hard to see on here, but it's basically this one
Right.
that we were looking at right here. So
Yeah.
you got the break and the retest right here.
That quick move down to like 19 or
Yeah,
20.
yeah, yeah.
Yeah.
So what I did was I took a timing of when the break and then the retest happened. So when the retest happened and then it started its bull run, how long did it take until we made a new all-time high? And it actually
Mhm.
happened 78 bars from that point. So when you take this trend line here and it broke straight out and it didn't have a retracement back to the trend line and you go 78 bars, that's when it actually broke the previous all-time high. So if you also look at where we're at today and you take that same time and you go 78 bars out, based on this, we should see it get back above 69K in October of 24. So not
Wow.
that everybody's going to be, not super happy about hearing that because they'd like to see all-time highs earlier, right? We want to
Today,
just go,
sir,
yeah, we
today.
just want to go parabolic, right? Ah, let's just go parabolic.
What's all
Um,
this reasoned analysis about? Tell me about some moons.
yeah, exactly. But I mean, patience. If you have patience and kind of trade this red zone based on the lower time frames, there'll be plenty of opportunity going back and forth in this area. But the other thing I have on here is these black fib levels, and basically it's just the move back to the upside, to where how far did the market go up? It hit the 38.2% level here, went sideways, pushed up to the 61.8% level here, then we went into the halving, which these vertical lines are the halving here. Then we started to get that little bull run, and then once it broke out of the all-time high, then we got that parabolic run. So on the same fibs here, this one actually went up to the 61.8% level. This one actually retraced all the way back to the break point. This one did not. This one did, and it broke all the way back. So even though we get this is where that 47, 48K area comes on the 61.8% level. So on this one, you break to if it kind of continues to the upside, it could either kind of do what it did here and work all the way back down. So we could get up to 48K, work all the way back down to this 22K, and then start working our way up. Or we could actually get something along this line to where it goes up and then goes sideways and then takes off again later on. But that's what earlier time frames are for, and to find what's happening on the daily and is still in the bull moves, those kind of things. So that's why I still think we can get up around that 47 to 50K on this run, before
Mhm.
even retracing all the way back, or we just go sideways and kind of continue higher. But the thing is just like any both of these times back here, is we really didn't see a lot of crazy action until post halving on these,
Yeah.
and that's where the patience is gonna have to come in, is waiting for that. Now, of course, I would love to see it just break out and just go nuts, but based on previous stuff and based on the timing of these 78 bars, I wouldn't be surprised to I would be surprised to see it make a new all-time high before or until after the halving. But I would like to see it, but I wouldn't. I'd be surprised to see it based on previous things. But again, like, it doesn't match. What do they always say? Like, the past, it doesn't rhyme
It
or
doesn't
something like that.
repeat, but it rhymes.
Yeah,
Yeah.
it doesn't repeat. I need
Right.
more coffee. Let me get some more coffee.
No, you're doing great,
But
man.
but
And that actually does that fits quite well with one of my long-term models as well here. You know, I've been saying for a while now, like ever since Bitcoin broke back above, you know, 19, 20,000 bucks, this is like a transitionary market. It's a trans market. It's no longer like
Yep.
it's no longer a bear. It's obviously not a bear market. Is it a bull market? Depends on your definition, but
Yeah. It could
sideways
be
for a
a
while here is good.
consolidating market for a
Yeah,
long-term
yeah,
consolidating market.
exactly.
Yeah.
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 And
Yeah.
that's honestly what you want long term.
Correct. And that's why I think when you look at this red zone, I'd like for it to get up around that 48K and then kind of go sideways
Right.
between 35 and 48. I would love to see it sideways
That would look
between there.
extremely good. Yeah.
Yeah, yeah, but we'll have to see on what happens there. So all of this together, when you look at all these different timings, um, the when you look at this red, just a quick curvature. Um, so I would think 69K or higher once we get into November of 24, and then stretching out to where the timing of these high to highs. If you put the high to high out here, you're looking at November of 25. And
Mhm.
the lowest point would be this 124K. So that's where I think we could possibly be come November 20 of 2025. And
Wow.
that's the kind of numbers I'm going to be looking for, and kind of continue to watch the patterns to see if we get to that level. Now that 124, when you look at the monthly, this is the monthly chart I've been following for a long time. So right now, what I'm watching is this move here to where we could possibly get this run up to all the way to 48. Now it might only get to 35, might already hit the high, who knows? But right now, this is kind of the move that I'm thinking, and then we get a move back down to where the low should be happening at this point. So we could be seeing a low as we move into the end of this year, but we
Right.
don't know where that low is yet. We're just gonna have to kind of follow it. But if the patterns hold true based on what we're looking at on those other time frames, we should move up to around here, work our way back down to 35K, then start to
Mhm.
work up. Then you get to the halving, and then as you get up to this point, it's that post halving when you get up around that 69K that would break us up into some of these extensions, and maybe we get up to 83, and then we work our way back down to where that support would be, and then rally on out, and then you're looking at October, November or so of 2025. And when you look at the high to high just trend line here, this comes in right around about 124, 125. So if this kind of holds true on this kind of move, that's where that timing kind of comes into play on the post halving on the monthly here, as we move into that 2025. And that's where this number kind of comes into play. Go in, get past the halving, break an all-time high, then you get that run from 69K to 124, over a year's time, I guess. So it's not like it's something that would happen overnight, but that's what we're kind of looking at on that. So I'm just looking at this. I just kind of keep an eye on this one for low periods. Like this green down here is the low to low. So you got the low, you got the low. This one hit a low, not on a close, but on a. It didn't quite hit a low. This was the only failure so far, but and then we got a possible low in here. So I'm just looking at this as a guidance. I don't trade off the monthly. It's just more along the lines of just, are we going to hit some of these targets on the month on the time frames that we should see, so as we go forward. So given that, flipping over to the quarterly, the one thing I like to see on this one is that we're above the trend line here on the quarterly, just like we had on this one. We broke up. This one actually came. Remember when we retraced back down to the previous low, and before taking off, but this one actually broke and then just started taking off. So I like that we're above this. Now, of course,
Mhm.
it just happened, so it's going to take a little while to get a lot more confirmation. But right now, I like what I'm seeing, which gives us this possible move, going to the upside. On this one, this is a high to high to high, and then the high out here is at October of 25, just like we saw on the other one. But the other levels I'm looking at is the fib extensions off of here, where the once we broke the high, the 200% is a target. And in this case, way back when was 2474, and it hit here, but actually continued even more. This one actually broke out to the 200% at 42 149. Of course, it went a little higher, but it was basically that would be the target, and then we retraced back. So in this case, if we break out to the upside, we're going to be right around that 124 or so level on the 200%. And so when you look at it from a 3-month perspective, the timing would be right around that. Now this, I don't have it exact on here, but this should be 69 flat. So you're probably looking right around 124 or so on the 200, on the 200%. And then that's where that timing kind of comes from, is these fib extensions. Once you break new, excuse me, once you break new highs, like we were kind of talking about back in here, to where this 124K kind of comes into play. So that's what I'm looking at there on that. So not much else on this. It's just, we had the retracements 79%, 77, 72, and held, and then we broke the trend line, just that kind of pattern. So as long as that holds, I like this movement up to 124 in the next year or so, or 2 years really. And then finally on the annual, this one, I was kind of looking at just where we are on the annual here. And I just did a line chart to show where the annuals ended up. So when you look at the high here, it was just one bar each, for the corrections that we saw here.
Mm-hmm.
But once we had that low, and then we had another year of movement, and then we had that second year. It's that second year that broke into the new high. So when you look at then when you moved up to this one, worked your way back. I put the fibs in there, not that it would matched it perfectly, but you had the fibs here, went down to the 61.8% level roughly. This one went a little bit lower, but then again, this one went just a tad underneath on the fib levels here. But really, what I wanted to focus on was after we got this move of this year, then it's that second year that's key. So when we've had this corrective year down here, and now we're moving back to the upside. And of course, hopefully the bull market's established, and based on the weekly, it looks like it should. Once this year's over, it's this next year that's going to matter, because that's the year in 2024 that we should break the new highs and go up into the next area. So what I would do is, if you're looking at the fib levels, assuming in that 2025 time period, we get up to that 125 or so, or well, it's not working perfectly. I'm jittery on my computer, must be lagging or something. But just say it gets up around that area, then you're looking at this. Once it gets up to that area, then maybe we get a year of correction from there, when it could move all the way back down to the 54, 55, 60K area, based off a correction, just like we saw in this year, and then this year, and then this year. That would be the one bar based on wherever the high is. So I'm assuming we get the high, break into a new high, and then we have another year of highs as we get into the 124, and then it breaks down for the year to kind of figure out where some of those targets would be. But really, this is just kind of, not that you can trade off of it. It's just more of just interesting on how we just saw, how it kind of get a nice little move, a little bit better, and then a little bit of parabolic, nice little move, a little better, not parabolic, but definitely higher highs. So hopefully that same kind of pattern works out. So when you look at all the different time frames, and I really like this one the best when it comes to the timing, I like the 69K and higher post halving, and then 124 in November 2025. So that's the macro levels of what's happening after April. So medium term, I think we can get to 50K on this move to the upside in the run that we're seeing right now before we correct back. And then after we correct back, then we either get a full correction all the way back down to 20K again, or we get, back into that 35 to 30K as support if we get to that 50K. And I'd really like to see, like we talked about earlier, between 30 and 50K. I would love to see it just trade between that level back and forth for months would be nice. And then hold that support at 30K and then launch to 69K post halving. So that's where I'm at. So hopefully I know there's a lot of time frames. There's a whole bunch of things going on here. But I just wanted to kind of show you what I'm looking at from real early all the way out to major macro.
Yeah, man, that was phenomenal. So I do want to have just one question. I think a lot of people
Yep.
might have this question.
Ask many questions.
So yeah, so for this next move that you're looking for, kind of somewhere maybe like deep 40s, maybe even $50,000. Do you
Yep.
have like a range, like a time frame range that you're looking for that to happen in?
Yeah. I don't have that on here. Let me see if I can figure out how to
Mhm.
put it up here real quick. Um, the I don't think there's a way to do it on here. Let me see. Let me do a. I think looking at it roughly, you're probably looking at the end of the end of May,
Wow.
May,
So
June, May. It might be. I'm roughing this in here, and
right.
what I'll do is I'll get a chart. I'll get a chart. I don't have that one up here at the moment.
Mhm.
I do have a timing chart somewhere. I'd have to find it, and I want to spend 10 minutes looking for it. Um, I'll post it out on Twitter to show you the timing on it. I
Right.
think it's going to
Okay.
be June. I think it's June, where 48K is a target for around that June timeframe.
Okay. So I mean that kind of makes sense in the sense that
Yeah,
like, we're going to spend probably the rest of Q2 rallying, and then maybe sometime in summer we get that summer pullback, which is pretty, pretty normal in a lot of markets, at least going sideways during
yeah,
summer.
yeah,
So
yeah. That's true.
it makes
I
sense.
mean,
Yeah.
a lot of times you hear, uh, sell in May and go away,
Yeah.
um, and sometimes it,
Sometimes it just fucking rips in May. So
yeah, yeah, yeah. I
but
think
yeah, I
I think you
know what
did
you
some.
mean.
I think you did a statistical study on it,
Yeah.
did you not?
It was about
Um,
50-50.
was it 50/50? Okay,
It
cool.
was about 50-50. But
Yeah,
in general, especially like for the old timers, in the summer, like most people would kind of take time off, and,
yeah,
not much would really happen in markets. It's a little bit less true now that there's a lot of just algorithmically driven price action, but still, usually that's kind of like a slumber time. So it
yeah,
would kind of
yeah.
make sense to me
It
as
was the
well.
days when you took your profit in May, you took all your
Yeah.
money, and you took your family out on
Hey,
summer
go for a
vacation.
vacation.
Yeah, and then come back and then reach and then put it
Right.
back in the market.
Right.
But um,
Yeah.
but might not necessarily be the case anymore. That based on everything's kind of
Yeah, I mean,
different when
people
it
just
comes to
click one
timing.
button,
Yeah, exactly.
and it's done.
Yeah,
Yeah.
the
Yeah,
amount of
here.
information people have these days is just so weird.
Oh, yeah,
I
man.
mean,
It blows my
back when
mind.
I mean, it's just so
Totally.
nuts.
It totally
But
blows my mind. Like 50 years ago, you got on the fucking phone and you called your broker and you said, "Hey, can you buy from me?" And you don't even know if you got filled or not. It's so crazy.
all
I
right,
couldn't
yeah.
imagine
Well,
that.
now you're making me feel old because that was
And
definitely
Swanee
my
was
world
around during this time.
way back when. The funny thing is like at the when I was at the CME,
Yeah.
um, I never had a floor license, so I could never
Okay.
actually trade on the floor. And the
Right.
weirdest thing is I could sit right on the like kind of the tiers that they have on
Yeah. Okay.
where the
Like on the
pits
scans.
used to be,
Yeah. Yeah.
when the actual people like killed each other in the pits. The weirdest thing is I could not talk to the guy on the in the floor trading. I couldn't talk
Yeah.
to him directly. I had to
Right.
pick up the phone, call my broker. Literally, he's sitting right next to me. I had to call on the phone, put the order in, then that broker put the order into the floor. I couldn't do it
God,
directly.
that
I'm
is
like,
so
what is going on
crazy.
with this world?
Yeah.
So it was interesting times for sure.
Yeah.
So
No,
so
it's
when you
it's
talk
super
about
strict
calling your
rules.
broker,
Yeah.
yes, that I don't know about 50 years ago, but maybe 30 years ago when I first started doing this.
I
Yes, I
mean,
was on the
shit,
phone.
man. People used to get their price updates from like the newspaper. It's like you just guess I don't know what's going on today. I guess I'll find out tomorrow.
Yep, gotta
Jesus,
wait till it
man.
prints.
Yeah,
But
yeah, exactly,
but yeah,
man.
no, that's those are good times.
Yeah,
But
man.
all
Well,
right,
I
so
want to
where
be
were we?
respectful.
Any other
Uh,
questions or
well, I just want to be respectful of your time because I know that you do have a time constraint here. I know that
yep,
U.S. markets are open up relatively soon, and
yep. I
we don't
got
really
10
have too
minutes.
much action going on. Yeah, okay. So I guess the next thing I'd want to ask is I think you briefly touched on it during your presentation, but it sounded like maybe somewhere around 2026 is where you kind of expect like a major market pullback, crash, correction, whatever the fuck you want to call it. Do I have that right, around 2026?
Yeah, based on these low to lows.
Right.
Yeah,
That
the
is
low.
extremely interesting.
Yeah, the
And I'll
lows
tell you
came in.
why. Yeah.
Yeah,
Go ahead.
it's yeah, it's looking like October of 26.
That is incredibly interesting to me because one of the concepts that I've been really mulling over for like the macro here is proposed actually by this guy named Phil Anderson, who's a real estate guy
Hmm.
who's like gone over the last 100 or 200 years or so of the real estate cycles and found that there's about I think it's like 18.6 year cycle for real estate, which correlates very, very well, obviously, with traditional markets as well,
Hmm.
which by
Yep.
extension will also correlate with Bitcoin. And
Yep.
he's basically saying, yeah, we do expect, markets to essentially rally into about 2026. And then that's where your big crash, recession, whatever the fuck you want to call it, is going to be happening. The thing that a lot of people are looking for right now, like the bull trap and, the recession that's coming right now and all these sort of things. He's saying that's about when it would happen from this cycle's perspective. So it's very interesting to see you come at this from a completely different angle. I'm sure that you're not like, that's not on your radar really, but just from your tools, you're able to kind of deduce that as well, which, usually to me is like a good sign.
Yeah, yeah, no, that's very interesting. I actually want to look that up and kind of look at the real
Yeah,
estate.
he's not super active on Twitter, but his name is Phil Anderson. He's an Australian. He's an old timer. I think he's like late in his 60s maybe now. But very, very interesting guy nonetheless. Very fucking interesting.
No,
So,
that's interesting.
uh, yeah, totally, totally.
Yep, yep. So that's
Um,
where now when it comes to price,
mhm.
that's going to be a little bit more difficult, but
Right. Yeah.
you're probably, like I said, if we do end up getting to the 124 from November of 25 into 20 into October of 26, that'll be that
Mhm.
likely year of consolidation or
Right.
correction, and that's when everybody that Bitcoin's dead and everything's
It
going down.
crashed to 50,000 and it's all over now.
Yeah. Oh my gosh. Yeah, it's great. So I would think 50, probably around that 50 to 60K
Yeah.
would probably be a low if we get to 124.
Yeah.
Again, like you said earlier, there's a lot of ifs that
Mm.
have to happen for this to
Yeah.
continue. But I
Yeah.
do like that the patterns are still holding true, even though it's
Right.
it's happened many times. But Bitcoin's built that way, right? As long as you keep getting the halvings and the demand still there, that kind of thing, the pattern should hold true. But if it does break down, then we go back to the drawing board, start playing the short side and figure things out there. But the way things are starting to set up, uh, I'm really liking that we've kind of switched that psychology, and the timing's right, and it's happening right when it should. So the buying interest is coming back. So all of that together kind of gives me confidence um, that we could see an all-time high post having 78
Right.
bars past. Not that it has to be exact, but I'll
Mhm.
tell you what, if it breaks 69K exactly at that timing, I would be like, fuck yeah.
Yeah.
But we'll see. We'll see how it goes. But like I said, um, patience. A lot of
Right.
times when with trading, it's all about patience. And right now, we could be in this 25 to 50K range for a long while,
Yeah.
and that's going to keep people in patience, right? Oh my gosh,
Yeah.
I want it above 50. Well, you might have to wait a little while longer, that kind of thing.
Yeah.
But there'll be plenty of opportunities in between, and continue to trade, unless of course you follow somebody that still thinks we're in a bull trap, and then you're going to lose your ass, and then you're going to cry, and then you're
I
going
don't
to
think there's any more evidence that could possibly convince someone who still thinks it's a bull trap at this point. I mean,
yeah, exactly.
Bitcoin at sixty-nine
It
thousand
definitely
bucks.
could. It
What's the
definitely could
cap?
correct back right now, but
Yeah.
we've already had what 100 plus 200% move, whatever the hell it was.
Yeah.
You kind of missed
Yeah.
out on that, So
Well, I mean,
uh,
if you look at even the daily right now, the corrections are becoming more and more shallow. So it's looking more to me like on the greater scale of things, we're kind of completing one of those Wyckoff accumulation schematics, if you want to call it that.
yeah,
Where
yeah,
basically, you expect those sort of pullback corrections, whatever the hell, to be shallow and shallower, and then all of a sudden, you get a bit of a parabolic move, and then things come back down. So for me,
Yep.
I don't know if I'm necessarily, if my first target is certainly not 48,000 to 50,000 bucks, but neither was 30,000 bucks when Bitcoin was trading, when we last spoke. But as things progress, they can certainly get up there. It's just I don't have anything in my system that tells me that right now. But
Yeah.
generally
And
speaking, yeah, go ahead.
oh no, no, I was going to say the interesting thing about what you're saying about the shallower, the when you get those shallower dips,
Yes.
that's literally what my whole thing is based off of. Because
Oh, right. Yeah, the shallow
Becau
fib. There you
yeah,
go.
so
Yeah.
every time it kind of gets there, you're kind of pressing your position. So
Right.
if it stays on that and it keeps getting those shallow fibs on the way up, you're gonna have a really strong position going in. So even if it does
Right.
start to correct back and you get back out, you're already gonna be in you're gonna be in really good profit
Right.
going forward. So, but that's what I also like to see. So it's interesting that you say that when you get
Yeah.
those, it's that
Well,
certain pattern of those
that's
shallower fibs.
now I don't have an expert understanding of your system, but from what I do understand, it's a very beautiful system because what you're doing is you're mathematically proving that basically by looking at where the fibs come in. It's like, oh, I have this documentable and objective evidence over here. This is
Yep.
what's happening. There we go. Instead of just guessing, obviously.
Yep.
But
Yep.
that's why
That's
we
exactly.
have systems, of course. That's why we have
Yeah,
systems.
yeah. It was all really just trying to find a way to mathematically measure psychology, which is
Right.
not an easy thing to do. But if you can do that, then you know where the psychology levels are and where the buying and selling interest should be the heaviest. Um,
Absolutely.
that and my method's just one way. There's many methods,
Mhm.
and that's why I like following you and others that have good systems and good indicators. And when that confluence is together, and that's why
Yeah.
kind of when it's all working together, it gives you that comfort to know that a lot of buying interest should come in at this level. And if it doesn't, then we all know to get the hell out, right? And then
Yeah.
we figure it out later. Go back to the
Yeah,
drawing
of
board.
course. I mean,
Yep.
systems, fail, systems
Oh
need a
yeah,
little bit of
absolutely.
retuning here and there. It
Yep.
happens, obviously.
Yep.
So again, I just want to reiterate for anyone who might be listening at this point, when Swanee's saying these sort of things, like you can't just hold him, like you can't come back in like a little bit and say like, hey, but he said this was going to happen. It's like,
Yeah, yeah, yeah.
we have a lot of ifs here and whatnot.
Yeah,
But
this is
for right
just
now, the
just
model
an
still holds.
analysis.
Yeah, absolutely,
Yeah, yeah,
absolutely.
yeah. Just
And
something to use with whatever strategy and whatever risk management program you have. Take this
right,
as information to help validate some of the stuff you're doing. Do
exactly.
not go out and just buy the market thinking it's going to go to 48K tomorrow. Don't do that. Do not.
But you'll
Not
give
financial
refunds, right?
advice.
Yeah, of course, of
Yeah, this
course.
is just
Um,
informational, and use it as you see fit.
yeah, but I mean, the model's working. The model still is working. So until that
Yes.
happens, I mean,
Yep. It's
that's
been it's been almost 3 years off of this now that's
yeah.
been holding. So um, I'm loving it as long as it keeps holding. And
I'm loving it too, man.
dude,
I'm loving it too.
but one day it'll break down,
Yeah,
and all these patterns won't work. And what will happen is you'll find out who actually knows what they're talking about
yeah,
later on. Like because right now it's a nice little system and it's working perfectly until it doesn't. And what makes a good technician is ones that know when those reversals are going to happen, and when those things really start to break down. Everyone can follow a bull trend and kind of ride it. It's the expert opinion of knowing when that reversal is going to happen is what I believe makes a good technician, is when the
right on.
when to switch that excuse me, when to switch that trend around. But
Indeed.
which is not an easy thing, but that's what we're here for, is to help guide and you know kind of be that co-team. We're kind of a
Yeah,
team, working
exactly.
together, that kind of thing.
Speaking of, man, those some wise words from the legend himself. And as always, man, you're welcome back on this channel whenever you want. Whenever you want, we're more than happy to have you. I know so many people were asking about when Swanee going to be back. I'm like, whenever he wants, man. Whenever he wants, he's coming back.
Yeah, I
But
was waiting until April because that was kind of
yeah,
the call. So
it was a
maybe,
hell of a call, man.
hopefully I'm coming back on your show in June and we're at
Let's
50K.
do it.
All
Yeah,
right.
absolutely, man. Absolutely.
I don't know if that'll be
Yeah.
the case, but I would love it. It'll be awesome. But we could also come back on the show in June and we'll be at 20K. But we'll have to we'll have to
This
kind
is
of see
possible
what happens.
too. It's the
Yeah,
never-ending
yeah,
game. But yeah,
yeah.
man, it's a pleasure having you on as always. Of
Thanks,
course,
man.
all of Swanee's links will be in the description below. Check him out. You've got your website, you've got your Twitter, you've got your Trading View, where you're pretty active on. So yeah, give him a look, and we'll see you again June-ish, something like that. And thanks
Or
again for coming
maybe
on,
earlier
man.
if things get
Yeah,
if things get
absolutely.
crazy. But yeah,
Yeah,
that
totally.
would be kind of that next time frame. See if that 48 to 50K hits that June time frame.
Indeed.
It might
All
be
righty, my
June.
friend.
I'm gonna get the timing chart and throw it out there on Twitter. But
Beautiful.
I believe it's right around June. I'm going off memory and I can't remember.
Right on.
I did the timing a little while ago and I just can't remember exactly the date. But we'll figure it out.
Gotcha. Yeah,
All
either
right.
way, it works. And hey, man, it's a pleasure having you on as always. Thank you so much. And thank you for everyone listening. And we'll catch you next time.
All right. Thanks, Krown.